Welcome to another episode of Kiss My Assets. I am Rocky Peterson, Vice President of Investor Relations and Lead Designer for Neighborhood Ventures, sitting here once again with Jamison Manwaring, co-founder of Neighborhood Ventures. Hi, Jamison.
Hi, Rocky.
Okay, so we had a live stream and we discussed a little bit more in depth some of the slides that John talked about, and we did that. And it was really interesting because what he wanted to discuss more was interesting to me because he really did actually teach me a few things. Don't tell him that. But, and I think that it would be beneficial for our investors, our listeners, for you to do the same. So slides that you liked from our live stream, which is basically our communication with our investors, what would you have wanted to go more in depth on?
Yeah, and John really built upon and we wanted to spend time with investors talking about where we're at as a company and our ability to execute on these projects. Because if you're investing in a project, a good percentage of the risk is, can this team do what they say they're going to do? And so we wanted to spend some time, and John focused on that about our team, the strength of our team, the experience of our team, our ability to scale and use third-party vendors, the fact that we use a great third-party property manager to manage our properties. That takes a lot of
It's so key.
load off of us so that we can focus on what we're good at.
Because one might say, for the first 2 years we did 3 projects, or first 3. What's the breakdown? Because I know that came up with some of our investors where they're like, and that's why he responded that way. Like, what's been our cadence?
Well, and it's as we grew, we were limited in what we could do and what we wanted to do as we wanted to learn, how we wanted to build the company. So it was like 2 projects a year was kind of our average. And then so far this year, we just launched our 5th project in 2021. And yeah, that's really what prompted it, is as a company, where we're at in our maturity to be able to take on larger projects, more projects, do more units, do more doors, as it's commonly referred to in the apartment industry. So John focuses on that side of the business, the execution, working with our team on the ground, and including you on the design side and our construction manager. And so the next thing beyond that I decided to focus on, and what I want to talk about more today, is our investment thesis. Because
Okay, back up really quick. What is an investment thesis?
Yeah.
And then you can tell me why.
Yeah, so your investment thesis is, as an investment company, what we believe. It's almost like your religion. As an individual person, what do you believe about life? What do you believe about where we're going in the next life? All that stuff.
Okay.
For a investment company, your thesis is, what do we think about the market? Where do we think it's going? Why do we believe what we believe? It's kind of our why. And your investment thesis, similar to your personal life, you don't typically change that a lot. If you do, it's typically
for a very good reason, or for a very demonstrative, delineated reason.
Yeah.
It's funny that you say that. I feel like as soon as you said, it's like you're almost like one's religion. When someone tells you how they feel about something or what they believe, you immediately, or at least I immediately, compare and contrast what I believe. So I can see from an investor standpoint, it's helpful to know our investment thesis, because they're going to immediately compare and contrast that against their own investment thesis or against their own personal beliefs as it relates to investments.
Yeah, and I think another way to put it is, it's our why.
Okay.
Why do we make the investment decisions that we do? And it doesn't change a lot, but every now and then you have to kind of go back into the well and say, okay, well, what do I believe personally? And as a company, what do we believe? What do we see happening? If you, as an individual, never change your beliefs, you never go there and you say, that part of me I'm never thinking about again, you become pretty stagnant, pretty rigid.
Right. Because you're not assimilating new information.
You're not,
right.
Even if things are changing. So again, as a company, it's about talking about what do we believe, why do we believe, and if anything's changed, if it has, why. The good thing about being a company is it's a little easier to navigate than it is personally, because that's pretty deep territory as an individual. But as a company, it's a little bit more logical and a little bit easier to pinpoint. So that's our investment thesis, and
Okay, thank you.
we talk about it all the time.
Yeah.
And so we're not just saying, hey, invest in this property and get a great return. We're talking about why. We're talking about what we expect is going to happen. We're talking about why we picked this and not something else. And so that's what I wanted to dive into today, is that thesis. And you brought up, as far as it changing.
Yeah, does it change? I mean, we kind of talked about that from like a personal. So as we get new information, but it has to remain rigid enough that it's an actual a belief or a more constant. But yeah, you have to be able to.
Yeah, we have to look at new information and then ask ourselves, does this change what we believe?
Okay.
And so it shouldn't be changing all the time, by all the, day trading type of mentality where, oh, we heard this today. Oh, we heard that. Now we got to do this. We got to change this. We don't do that.
I know, like the Robin Hood. Like I saw a big thing on that and how loyal its followers are, though, or like its subscribers. And there are people that really like to do that. They like that fast back and forth. And we are more like slow and steady.
Yeah, and that you can take in that information that comes every day, but it's not going to necessarily move you until you have what's called a thesis change. So COVID was a thesis change. We all had to adapt. We didn't have a choice, right? What I look forward to diving into today is what is our current investment thesis as a company. And this is, I think, is important for us to be clear about as a company, and internally and externally to all of our investors, that they understand what we believe and that they basically agree that they believe in it also.
I think that's great. Okay, so what is our investment thesis?
So post-COVID, some things have changed about what we believe or been modified, and some things haven't. One thing that has been modified is post-COVID, apartment buildings and multifamily investing has become the darling of commercial real estate. And before COVID, it was viewed as a good asset to own. And within commercial real estate, so if you see commercial real estate's kind of a big umbrella that includes multifamily apartment buildings. It includes office. It includes retail strip centers. It includes industrial buildings. And within it also includes hospitality hotels. Within the broad umbrella of commercial real estate, apartments were always viewed strongly, but sometimes industrial is viewed more favorably by some investors. Some people like office. There's different factors to each one, and I'll just give you an example. For offices, if you own an office building, you can sign long-term leases with really strong tenants. So if you have a big law firm come in and they sign a 10 or 15-year lease, it's consistent revenue. On the other side, multifamily, typically you sign 1-year leases. And so there's strengths and weaknesses to both.
I can see that.
One of the strengths to multifamily and the fact that we sign 1-year leases is if we get in an inflationary market where the dollar has less value and prices are going up, if you have that 15-year lease with a law firm, it doesn't move up. You're still only going to be able to get the same number of dollars from that square footage that you're leasing to them. If you own an apartment building, you can move those rates up, as we're all seeing.
Mm-hmm.
Rents are moving up, partly due to inflation, partly due to demand. But you move them up. As an owner, you move them up to the market rent. You wouldn't be doing your job if you don't put your rents at market rent. And so post-COVID, multifamily has become this really desirable asset. We've always liked multifamily. We might like it even a little bit more today. Hey everybody, this is Jamison. Thank you again for listening to our podcast. if you're sitting around the couch or you have your iPhone or your smartphone, take a look at our YouTube channel. Just put in Neighborhood Ventures into YouTube and you'll find it. There you'll be able to see some really cool videos about each of our projects. We do little snippet videos, we do longer, well-produced videos, and if you're just sitting around the couch with your family, they're fun to watch, educational for the kids, and we try to make them both fun and informative for all our investors. So take a look at our YouTube channel if you haven't yet. Subscribe to it, click the little bell there, and you'll be notified when we have new content. We put out new content most weeks, so we'd love to have you follow and see what we're doing over here at Neighborhood Ventures, and have you be an active part of our team. The other post-COVID trend that's really important for us is we're obviously based in Arizona, but we continue to believe in the Arizona market that employers will continue to come here, and we saw some really big announcements from semiconductor companies that post-COVID they decided to move here. They like the friendly government that's here, business-friendly government. They like the lower cost of living here compared to other markets. They like the consistency in the weather. Even though it gets hot in the summer, everyone knows it. There's no tornadoes. There's no hurricanes.
That's true.
And if you're running a data center, you don't like that. You don't like tornadoes coming through your data center.
Absolutely.
Or a big chip plant or an Amazon fulfillment center. It's consistent here. So there's post-COVID, we're even more strong on Arizona than maybe we were before, because it accelerated the migration to a market like Arizona from markets like San Francisco, Southern California, and the Northeast.
So we have these two major components working to Arizona's favor. Number one, that there's this continued really strong migration, which I think everyone can appreciate. But then there's also this, this supply and demand of homes for that. And then this really business-friendly environment. I mean, it almost, forget the pun, it's almost like this perfect storm where multifamily has never been stronger. But we started doing this before all of this, and it was still good.
Yeah, but we love multifamily, and we love Arizona. So there are some investors who have different feelings about different markets, but we're an Arizona market and we believe in it. And, John's been here for a long time, you've been here for a long time, and I've been here for less amount of time, but we know what Arizona, anybody who's lived in Arizona a long enough time knows what's happening here. The migration's going to continue, and we believe that there is a shortage of housing that will continue to occur as more people move here. So that's the other part of our thesis. Specifically with multifamily, we like the fact that we might, as we might be going into an inflationary market, that we will be able to adjust rents as prices go up. So these are kind of our subpoints as to why we like multifamily in particular. We also see a shortage of housing. When we look at the construction pipeline of new housing coming on, there's still a shortage of supply for the demand in housing in what's expected. So we continue to believe in that. And we believe in cash flow properties.
Yes, we do.
So we go in, we want to get these things cash flowing as soon as we can. We want to get them renovated nicely, but soon after that, get them leased up, generating cash flow. When all else fails, cash flow is king, and we love that.
Absolutely. I was at Williams today, one of our properties in Mesa, and something that came up that was really interesting to me is we do our best to project what we think the rents are going to be, and we use a variety of sources. John's people that research it, and then also Diana, who's on the ground, and she really has a finger on the pulse of what's going on. And since we started, maybe 3 or 4 months ago, even those projections have changed, and they're leasing at a higher rate even from 4 months ago, and they're leasing up so fast. She has applications in for the ones that aren't finished, that are almost done, and it's really gratifying to see the model play out. But even if it wasn't as brisk as it is, it's still valid because of the supply and demand. There's just not enough housing in Mesa. So, I mean, there's so many variables, and on each one of them, they're firing right now. But I mean, that it seems like that will fire for a long time.
And that sort of insight into projects like Williams give us confidence in what we're doing, because it's not a projection. It's not a, I read an article in the newspaper and this is what I think. It's, we own a building, we're leasing it, and we expected the average rent to be $1,350, and we're already starting to do leases at $1,500 per unit for these 2-bedroom units.
And
so
they lease
it's
out
already moving up
immediately.
Yeah, there's a wait list, I believe.
Right. And so that's when you talk about cash flow, there's that delicate balance between being able to be as aggressive as we can with getting the building to its highest and best value. But then, if something is sitting for 2 months, that's not going to work because it blows up the cash flow part.
Yeah, and we don't thankfully have to worry about that, because
Right.
if we have an available unit, we lease it up quickly. So we'll get, units are leased in a couple of weeks. So
It's amazing.
So that building should be leased up in a couple of months and
Easily.
generating cash flow. Yeah. In addition to multifamily, we talked in our live stream about the retail sector, and that's one of the other sectors within commercial real estate. And we did our first project, venture on Broadway in retail, and I want to talk a bit about our thesis around retail, and it's Arizona retail. And what's basically happened is there's some opportunities post-COVID to buy some properties that are being underutilized. And in what I call the post-COVID reshuffle, because a lot of these businesses, retailers, restaurants closed.
Right.
But the reality about that industry is it's very cyclical, and they end up coming back. A restaurant person, they're a restaurant person. They'll close the restaurant, move everything out, end their lease, or stop paying on their lease, and they'll go start another one 6 months later. Now these guys are starting to come back. And I'm not saying it's easy. Being a restaurant person is really props to them, because, and I love restaurant people because that means I don't have to cook. So I go out a lot, but it's a hard business, but it is cyclical. So now they're coming back, and you get some smaller retailers that when COVID happened, they said, oh, we're shutting our doors. We're out of money. Now they're going to start coming back. So in this reshuffle, we're being opportunistic in our purchases of buying properties in good locations. So we're not buying properties in these kind of so-so locations. We're going into good core locations. Reinvent how the property is being used, and with adaptive reuse. What that means is taking something that's existing and augmenting it, changing it, tweaking it, but not building for anything from scratch. And then having an opportunity to bring in some of these new retailers. In the case of our Broadway property, case in point, we bought a property across the street from a new 300-unit apartment building, luxury apartment building. We renewed the lease with there was one tenant who remained a hamburger joint, Burger Rush. We had them sign a new 10-year lease. And then we brought in Dunkin' Donuts on a 10-year lease. And now we'll bring in one additional tenant. And we're taking this project from, an empty retail center in Tempe with one burger place that made it through COVID and everything else was vacant to Dunkin' Donuts, drive-through, and a lively,
I love a good drive-through.
Great retail center right there for the people, right there for people to utilize.
Yeah, if I don't have to get my kids out of the car, it's basically at the top of the list. So I appreciate that part of it. It's funny, the interplay too with the multifamily and the retail. We believe in multifamily, but when there's that big multifamily development happening right across the street, we know that those people are going to want somewhere to eat. They're going to want somewhere to get their coffee. And then, aside from that though, like you said, we're not like going out into, the far west valley, the far east valley, where it's still kind of unproven.
Yeah.
We're talking about a major thoroughfare that, for one reason or another, and what's funny too is if that apartment complex had already been built, there's no way we would have been able to get that for what we did.
We knew that it was underway, but it hadn't started when we secured the contract, and that's kudos to our team on the ground. John and Chris, who are finding these deals and knowing what's happening and being ahead of the curve a little bit. So that's going to end up being a great project for us. And when it comes to retail, those are the opportunities we like. We love Arizona in general. And so whether it's multifamily, opportunities we like are retail. We believe in them, and we'll move on them if we find those that are in our sweet spot.
So using that same investment thesis as a framework, is there a possibility that we would ever get into hospitality or industrial or any of those other sectors of the commercial real estate?
We like those sectors as well. I like multifamily more than those sectors for some of the reasons I already mentioned. But what the key thing that we believe in is that if you were going to buy a project, we have to have a deep level of expertise in that area. Industrial is very different than multifamily. Multifamily is very different than office. And we brought in Chris Lacoste a few months ago because he had retail expertise and we wanted to get into retail. And he'd been working in retail for 15 years. So that's what we would probably do before we go in those sectors. So right now we have that expertise in these two areas. That's why we're able to find the deals that we can.
We like to stay in our wheelhouse. Yeah. I mean, it's the same reason that we get really good third-party vendors, because Diana is an absolute bull.
And that's our property manager.
Yes, Diana is our property manager. She's an absolute bull. She knows exactly what she's doing. She is really on top of things in a way that that would be out of my wheelhouse for sure. And to be able to shift that off, I think, is exactly what you're talking about, and certainly what John likes.
Companies get in trouble when they start doing stuff that isn't at their core. And we're not in a hurry. We're patient. We want to do stuff that we believe in, that we know we can execute well on. And those are the opportunities that we're looking for.